G'day guys, welcome to the channel. My name's Tim, and on today's episode we're trying to answer the question, why was 2021 so disappointing when it comes to Bitcoin? So many people are saying comments like, it's the shortest cycle we've had, it can't be the cycle top, surely it's a double peak and we're going to continue on from here. And I don't know whether we will or we won't. However, I do agree when you compare the peak to 2017 and 2013 and even 2011, this time it was more rounded. It wasn't as exciting. It was kind of a Bart Simpson shaped rounded top. And essentially it only 3x'd from the peak in 2017 compared to 2017, which I believe 20x'd compared to 2013. I think 2013 was roughly $1,100 or so. And then we got up to about $20,000. So to go from 20 to 64, it's pretty disappointing, according to the internet. So anyway, I've been reading a book called The Secret Life of Real Estate and Banking, which sounds like the most exciting story you could read. But it's from an Australian economist named Philip J. Anderson. And I originally heard about Phil Anderson through Jason Pizzino's YouTube channel, a fellow Aussie YouTuber. And I checked out the webpage, and what you'll notice is that he discovered that looking back over data and looking at real estate cycles and economic cycles, there appears to be an 18-year cycle on average that real estate goes through. And real estate does drive the economy. It's a finite resource, similar to Bitcoin, and it does drive the economy, and profits go into land, and it's a store of value. And I'll just show you what his cycle is all about, and I'll bring this back to Bitcoin in a moment. But essentially, this is the cycle here. So it's 14 years up, followed by 4 years down with a recovery. And this repeats over and over again throughout history. And you'll notice in the middle of this 14 years up, there's a mid-cycle slowdown where for a couple of years maybe, the real estate prices slow down and then they start to boom again. And in the last 7 years, the last couple of years, they call that the winner's curse because this is where it goes parabolic and like normal people FOMO in and then the market crashes. So this repeats over and over again, this 18-year real estate cycle. So I thought, okay, let's check the data to see if it really stacks up. So first of all, this book was released in around, I think it was 2009 or so. So I had a look at the Federal Reserve data from the bottom of the financial crisis, which was here in Q1, 2009. And you can see we recovered about here, Q4, 2011. And from that point forward, just like the theory predicts, or the cycle predicts, we went up to Q4 2017. And just like the theory predicts, we had a mid-cycle slowdown. So from Q4 2017, and you might remember that's an important date in the history of Bitcoin, the cycle starts to slow down. And now from around Q2 2020, which was around when COVID started taking over, real estate has now started to boom in the second part of this cycle. So it's following this pattern exactly at the moment. So this point here was Q4 2017, and this point here was Q2 2020. Now real estate, somewhat, and I'm only partway through the book, so this is a work in progress, but real estate may lead the economy. So what I decided to do was overlay this chart with Bitcoin. So you can see down here, we've got Bitcoin from 2011 right until the current day. I've just done it as a weekly chart to make it fit on the screen. And I've overlaid this 18-year cycle from around 2011 at the start when we noticed the data starting to move up, right to Q4 in 2017. And then we've got our mid-cycle slowdown to Q2 in 2020. And now I've got the next 7 or so years going up. Now, it might only be 5 years going up. We don't know the exact dates. It's 18 years on average. All right, so what I noticed was the 2011 peak, the 2013 double peak, and the 2017 peak all occurred during this boom period. And not only that, but 2017 itself was right at the climax of this boom period. Now, check out this. I've overlaid the Dow Jones Industrial Average and Bitcoin for the 2017 peak over the same time scale next to each other. Now, on a vertical scale, they're different, but I've squished it down so you can compare the shapes. And you'll notice that Bitcoin on this bottom line has the peak here in 2017 at the very end, and you can see that in very early 2018, the Dow Jones reached a peak as well, and you can see that it was a real spiky, almost parabolic peak. And then it crashed back down. Now look at the shape. With Bitcoin, you crash back down, you have a relief rally and crash down again. With the Dow Jones, you crash down, you have a relief rally, and then it goes down again. This ABC correction, very similar to Bitcoin. Bitcoin was slightly ahead. And then Bitcoin continued on in its bear market. Now, the Dow Jones started to recover, which is very interesting, and it ended up reaching that same peak again, forming a double top. And then from that point forward, it started crashing down. And if you look down here, what happened to Bitcoin, as the Dow Jones started crashing, people bought the dip, it went back up, people bought the dip. Now at this point, Bitcoin also capitulated. So they synced up to bottom out at the same time around December 2018. And this is the point where I believe the 2021 cycle began. Okay, so that's really interesting. So you can see how the stock market had a real definite parabolic run-up, and Bitcoin did too. Now, but I tried to do the same thing with 2021, starting from that December 2018 date. And you can see the stock market, we had the COVID crash here. Although we've been reaching all-time highs, it hasn't really gone parabolic. It's gone up steadily and at a very acute angle, but it's not really going parabolic. And I'm wondering if partly the reason for that is because we're in this mid-cycle slowdown. And now on top of that, we had COVID, and we've had 32% and growing, more money printing occurring. So all these factors are into play, but perhaps the net result is that we've had a steady market. Instead of having a parabolic run-up or some sort of recession, we've had just a steady market. And Bitcoin has been steady. Nothing out of the ordinary. 3x from the previous cycle top. Okay, so let's go back to this screen. So if the real estate cycle is fore-running the economy, perhaps you can see the slowdown occurred here, and you think, well, the boom started here. But if we offset this, perhaps that's what's happened. Bitcoin has been peaking right where there's some sort of mid-cycle slowdown. And because of the money printing and so forth, that's been hiding the fact that we have been in a slower part of the market. But now we've seen real estate prices start to boom. And this is expected to continue to somewhere in this region. Now, it could be 2025, 2026, 2027, 2028. We don't know the exact figures at this point, but it's the 18-year cycle on average will be somewhere in that range. And the last couple years will be somewhat parabolic, even more so than what we saw in 2017 with this sort of, some sort of parabolic run-up, and Bitcoin also had a parabolic run-up. So then, if Bitcoin now goes into a bear market, and the next peak occurs, let's say, somewhere in 2024, that'll be right in the middle here of this real estate cycle, which is booming. So the next Bitcoin cycle could potentially be that big parabolic run-up that we were hoping for. Then, if we somehow squeeze another cycle in before the end of 2028, somewhere in that range, if we're lucky, that might be the most crazy, parabolic, speculative bubble we've ever seen. And that would be absolutely incredible. Now, this is all speculation. I'm still reading the book. I've got a fair way to go. Bitcoin could start to catch on to this tailwind and start going up from here. We don't know. There's lots of scenarios that need to play out over the coming years. There are so many things that could happen in the next 5 to 10 years. It's very difficult to predict that far ahead. But this cycle has been running for the last 200 years. So with some level of certainty, we can predict that this will have a big effect on the market. Okay. So one last point I'd like to make is that if this does happen, we have to be careful because this looks very similar to what happened in the 1920s, coming to the end of a macro super cycle with the macro markets, and it ended up having a 89% crash. So let's be careful, but this could be very exciting over the next decade. So anyway, I hope you enjoyed that video. As I read more of the book and learn more about this real estate cycle, I'll report back and provide further learnings. But this could be something else to keep an eye on in terms of how Bitcoin interacts with the macro markets and the real estate cycle. So I hope you enjoyed that video. Please subscribe and like and share. My name's Tim. You can follow me on Twitter at TechnicalTimCR1. So until next time, I'm Tim, and cheers.